Everyone wants to get rich in 2026, but how? Stocks, real estate, or a side hustle? Today, we calculate the math to see which one actually wins. We are judging these three contenders on three critical metrics: return on investment, effort required, and risk level. Let's fight. The stock market. Coming off an 18% surge in 2025, driven by the AI boom, stocks are the king of passive growth.
The pro. Compound interest. You buy, you hold, you wait. Historically, the S&P 500 doubles your money every 7 to 10 years with almost zero daily effort. The con. Volatility. In 2022, markets tanked. If you need cash now, stocks are risky. You are at the mercy of the market's mood swings.
Next, real estate, the heavy hitter. With housing forecasts showing steady 4% growth for 2026, this is about stability and leverage.
The pro, leverage. You put down 20%, but you control 100% of the asset. Plus, tenants pay off your mortgage while the property value goes up.
The con, it is not passive. Toilets break, tenants leave, and mortgage rates are still hovering around 6%. It's a second job disguised as an investment.
The side hustle. 39% of workers now have one. This isn't investing money, it's investing time for immediate cash flow. The pro. Speed. You don't need capital to start. You can earn an extra $1,000 next month freelancing or creating content. The ROI on $0 investment is infinite. The con? Burnout. You are trading hours for dollars. If you stop working, the money stops instantly. It's not wealth, it's just another job, unless you scale. So who wins? For pure laziness? Stocks. For leverage? Real estate. For immediate cash? Side hustle. The ultimate strategy: use a side hustle to generate cash, dump it into stocks for growth, and eventually buy real estate for stability. That is the comparison math way. Which path are you taking in 2026? Comment below. And don't forget to subscribe.